Thank you for joining us. Unlocking Homeownership. It's a webinar about VA home loans. My name is Jackee Princeau. I'm with the Jorgensen Group. I personally love clients that use their veterans loan. My husband's a veteran, and after moving to Texas, we just got to learn a lot more about all of the benefits, and using the VA loan was an absolute blessing for our family. And so wanted to share that with you today. I have my lender partner, Chris Weld from Pilgrim Mortgage here to talk about a little bit more of the details and loan type things that I have high level knowledge of, but he's a little bit more in depth. So take it away, Chris. What are you all about?
Yeah, I'm Chris. I'm with Pilgrim Mortgage. I do all types of loans, obviously conventional, FHA, USDA, and then other stuff. But VA is probably my favorite loan that we do, just because I think it's beneficial to the vet and it really helps them break into home ownership. So it's one of my favorite loans that we do.
Nice. Love that. Unlocking homeownership through the VA process. So of course, we're going to be talking about what a VA loan is. And basically it's a government-backed mortgage designed for military families, offering advantageous terms, no down payment, lower interest rates. And this is one of the main things that makes homeownership accessible. I'll let Chris talk about the eligibility here.
Active duty, you have to have served some combat time or have a time period with it. Your vets, most of you guys are going to be able to have it. We will check your COE and get your eligibility. And then your guard reserves, 6 years. And then you have to have some points on that. And that's something that you would be able to figure out for us. But those are usually the eligibility requirements. Just a quick overview of that when it comes to, who can apply for a VA loan and get eligibility with it.
Yeah, and that's a really important note to make, just because I've heard some misconceptions from some from active duty members that they can't use their VA loan until they're actual veterans. Well, that's
not true.
That's not true.
It's 2 years or combat. You've served into combat for a certain period amount of time. So they'll let you use it then.
Awesome. So that opens up even more gates for you guys. Why VA loans matter? These are the reasons why we love VA home loans and why they open the doors for so many folks. The biggest one, obviously, is the zero down payment. You can purchase a home with zero down. There's different loans like conventional loans, FHA loans for as low as 3.5% all the way up to 20% and more. But with this particular loan, it's zero down with no PMI. Chris, can you tell us what PMI is?
Yeah, so it's private mortgage insurance. It just protects the lender in case you default on the loan. The cool thing is VA, you don't have PMI. They don't require it. So you can put zero down. You can put 5 down. You can put money down if you want.
Right. It's just
but
not required.
You still do not have to. You still don't have to have PMI. I have a guy right now in El Paso that I'm closing Friday. He's buying a $1.2 million home, but he's putting down like $700,000 because he's selling his other home. So you're able to put money down if you want, but you don't have to.
What is a typical PMI range? Is that like $500? Is that $100? Is that depending on how?
Do you mean like with a conventional loan?
PMI.
So
break that down for me.
That's a really good question. It deals with your DTI credit score.
Debt to income ratio.
Yeah, sorry, debt to income ratio.
Sorry, the jargon.
It depends. It really depends on, loan to value, all that kind of stuff. Ran one for a conventional guy yesterday and it was $50. It wasn't much, but I have ran them before. I have another guy that I'm running in Houston right now and his PMI was like $225.
Right.
And so we're probably going to switch that up and go with an FHA product because it'll be lower for them. But long story short, it's a big range. You just never know.
That's a huge differentiator between a VA loan and a conventional, is that there's no PMI attached to your loan. So that's up to several $100s in savings using this loan. The other thing is that you get lower interest rates than conventional, right?
You do. Yeah, you do. I like to say that our rates are very competitive with, Navy Fed, Veterans United, all those kind of places. But the one thing that separates us from those people is we don't charge an origination fee or lender fees.
Huge.
I can charge you an origination fee and get you an even lower rate. But typically I'm like, I don't want to do that because we have something called an IRRRL, and we'll talk about that shortly. But long story short, the rates are, pretty competitive across the board with a VA loan. I like to say they are pretty much in line with FHA rates, but they can sometimes be a little bit lower just depending on the profile of the application.
Flexible credit options. With a conventional, there's pretty strict guidelines. However, with the VA loan, the credit options are a little bit more flexible. Talk about that a little bit.
They are. So every mortgage company will have their own underlays or overlays that we call them in what we, so the lowest credit score we typically do with the VA loan is about 600. And we get a manual underwrite and all that kind of stuff. Yeah, we can, depending on the profile of it. That means like we can go in and take other compensating factors and manually overwrite the loan. But with that said, we stick around 600. I've seen some mortgage companies go lower, but it's just depending on that company and their terms and what they want.
So, okay. So an average, so you go as low as 600. What would that be if it was a conventional loan though? So what would the lowest score be on a conventional loan?
It's so hard to say because it's the profile of the application. So if somebody has a bunch of assets and other things, it's but I mean, I've gotten conventional approvals with, a really low 600 score. But like I said, they might have been putting down 50, 60%, stuff like that. So it just depends on the profile. We have a saying in mortgage that no file is the same. Everybody's different.
Yes.
Occasionally you will get, a couple files in where people have 800 credit scores and putting down 20% and they make 300 grand a year. And it's like, oh, this is, there's really no worry to this. But most people, every file is completely different. Nobody is ever the same.
I think the biggest factor is the debt to income ratio is a little bit more
lenient.
Correct?
I'm glad you brought that up. Yeah, so we're able to go up on a higher DTI with VA loans for sure. So let me explain that to you real quick. So on a conventional loan, we want to keep the DTI at around a 49.9, so about 50%. FHA 56.9 is kind of the max on the back end with that. A VA loan, we can go up higher, but like I said, it's one of those things where we have to run it through the system and see if we get an approval. Every file is different. You just don't know. Your DTI, guys, for people that don't know what DTI is, it's your debt to income ratio. So it's like we take all of your debts and then we come up with a percentage of what your debts are, with your monthly income. And then that's the front end and then the back end of your DTI. So that might be like a 15 or a 16. And then we add in your house payment with all those debts with your income. And that DTI could be at a 33. So it's a 15 and a 33 front end, back end. That's a pretty good file. That's what I mean by debt to income ratio. It's all of your debts plus your housing payment. And then we come up with a calculation for that. And then
compared to what you make.
Yeah.
And then we're going to go into what the IRRRL is a little bit later, but that's on the list because it's one of the main benefits of a VA loan. So we'll talk about that later. There's some VA loan myths, you guys' opinion on. And if you have any loan myths that you want to shout out, we're going to go over a couple of them. Some of the loan myths I mentioned earlier, one of them is that some folks think that you have to be a veteran and you can't use your VA loan while in active duty. You can. What are some of the VA loan myths?
The main one I've heard is they think they have to be out. I wish the government would do a better job with educating the vets on who can use it and the benefits of it, especially when you get out, right? I mean, that's something they should definitely
absolutely.
tell them.
That's a huge benefit of being a veteran.
I've read that
VA loans take longer to close. That can be true. And it can also be right in line with conventional, right? So,
so my conventional loans, I can close FHA conventional 2 weeks. I mean, I don't have a problem with that. Just the expectations need to be set clearly up front with how fast we need to close.
Sure.
I don't have a problem with that. VAs, the problem with the VA with taking a little bit longer is we like to have 30 days. We can close sooner. Is the appraisal. The appraisal, there's really no time set on when they're going to get the appraisal back. I don't have any control over the appraisal. We send those out and when they come back, they come back. But that's the main thing we need is the appraisal. The appraisal. But I've closed VA loans quicker than 30 days, but we typically like 30 days for a VA loan.
Got it. The other myth that I'm reading right now online is that VA loans are only for first-time homebuyers. That is incorrect. I'm on my second home with my husband and that is definitely a myth. You don't have to be a first-time home buyer. You can use your VA loan for your second, third, fourth, even a second home, like if you're buying a vacation home. So VA loans, it's required to just put zero down. As Chris mentioned, you can put more down to lower your monthly payment, but you're not required to put zero down. So you can put some money down to help you out there a little bit. I did want to kind of dive into the VA funding fee. So this is something that's added that's not introduced in the conventional loan. So the VA funding fee, I'll let you kind of talk about that a little bit better.
It funds it for future. It's like 2.15% of it. And then you do the your subsequent uses, it goes up to like right above 3, I think 3.3. If you have a disability rating, the cool thing is you don't have a funding fee.
Do you have to have a minimum disability rating so you can have like 10%?
Yeah.
Okay, that's
you're
awesome.
good. You're good on that. So
that's huge.
Any
disability rating, and you don't have to pay that funding fee. That funding fee, I put a note here that you can finance it, because if you don't want, you don't want to have that out of pocket, you can finance that into the loan, which is awesome. Entitlement and loan limits. Oh, this was one of the myths. Some folks think that there's a loan limit with your entitlement.
No.
Not true. With full entitlement, there's no loan limit, and that allows veterans to borrow as much as they need to purchase on a home without the typical maximum cap. Partial entitlement. So if a veteran has a partial entitlement, they can qualify for a VA loan, but it may come with certain limits and conditions that must be met. And you could be able to hold 2 VA loans at the same time, which my husband and I are doing currently. Can you talk a little bit about what a partial entitlement means?
It just means you have some money left over from your entitlement. It's a calculation we do, and it gives us an amount of how much is left. One thing too, on the entitlement and loan limit, we have somebody that was a vet, and we have somebody that's not a vet, where she's not a VA and he's VA, but they want to be on the loan together.
Oh, right. A couple. He's talking about a couple that are getting married, or they're already married.
Yeah, they're getting married.
They're getting married, looking for their first home.
And we had to work the file to see which way would be more advantageous for them. And if she goes on the loan, they're going to have to put down, I think, 12.5%.
Oh, good call.
And I was like, I don't know if this is really going to make any sense for you guys to do. And we looked at the numbers, and they were wanting to get approved for more, but even with putting her on the loan and doing the math and the calculations and then using the lowest credit score, just everything that comes along with it, it made no sense to do that. It made sense just to keep him on the loan and do it completely under him.
Sure. And to clarify, they were not married. If they were married, then that would not be the case, correct?
Yeah.
Okay. So just to clarify, that 12% comes into play. 12.5% comes into play with 2 parties that are not married. If they were married, that's null and void. Buying again. Veterans can use their entitlement again after selling a home, enabling them to buy another property with the benefits of the VA loan if eligibility is confirmed. So kind of just to wrap up that, make it full circle, you can obviously buy another home after you.
I've done that before for many people.
A lot of people want to know, what can I qualify for? What can the VA loan buy me? Real quick, single family homes, obviously. VA approved condos. We'll talk about that in a little bit. New construction and multi-unit properties, as long as it's 2 to 4 units and you're living in one of them. So great way for a veteran to kind of dip their toe in the investment property realm. They live in one unit, they rent out the rest, and now that's an income producing property. So really great way to use the VA loan to build wealth. Let's talk about single family homes. So those are the most common. You don't need a large down payment for your family on that one. Chris, I want you to talk about VA approved condos, because they can be a little bit tricky, but go as high level as possible, because I know it gets really nuanced here.
I will say that if you ever are looking at a condo, it's important to get with your lender to see if they are VA approved before you even start going and like actually touring the home, because you're going to get yourself all excited.
Yes.
There could be an issue with it, and I could be like, hey, this is a no-go. We can figure that out. We just need to get with your lender.
We need to be in lots of communication with each other and make sure that we're managing expectations along the way. And then exactly what he said, making sure that those condos and those addresses are approved first before we go view them, so that you don't get excited and waste your time on something that is not going to work. So
we just need to check the boxes on them to make sure that we're good.
Yeah. New construction. So this is another one that the VA loan can work for, can do a loan for any new construction property. And the new construction and the builders also have their own lenders. So, you can do either one. But just so you know, the VA loan can be used for brand spanking new houses. And sometimes the lenders that are associated with the builders offer lower rates, and they offer some closing costs to be covered. This is a really great slide. I asked Chris to plug in some real world numbers for us, comparing a VA loan to a conventional. This assumes a 740 credit score. So again, every file is nuanced. This is taking a very clean file with a very specific credit score and kind of breaking the numbers down. As you can see, VA loan with 0 down on a $350,000 home. That'll give you a 5.5% interest rate. You're getting a payment down to $2,052 here. The exact same house, $350, going conventional with 5% down. How much is 5% down on a $350 home? Do you know off the top of your head? Principal and interest. Your payment is PITI, which is principal, interest, taxes, and insurance, homeowner's insurance. So that all gets wrapped up into one payment, unless for some reason you wanted to pay your taxes on your own, but most folks decide to escrow their taxes.
And I did throw in like $100 for conventional on the mortgage insurance side
for the
here.
PMI.
Okay. So because you're not paying that on the VA. I mean, can these numbers change? Yeah, absolutely.
This is just kind of a
breakdown,
breakdown,
a rough estimate,
showing you that on the same exact house, a VA compared to a conventional, you're saving quite a bit of money there. And then the 5% down for conventional, that's $17,500 out of pocket for that 5% down. Huge that you get to get into a home without that down payment. All right, some winning strategies. This is where I come in, and how you can stand out as a VA buyer, when you're putting in offers. So obviously, strong communication. You really want to build rapport with the lenders that you're working with for the best outcome. Like I said, I can't stress this enough. Every file is super nuanced to your particular situation. And so Chris, very involved in that whole process, and he asks the best questions to make sure that you're, getting exactly what you want out of this, structure. Clean offer terms. So that's where I come in and I write an offer that is super clean for the listing agent and the seller to boost your offer up a little bit. If you're getting to the contract and making it messy for them, then it's harder for them to see value in that contract. Rate buy downs. Right now, we're in a really particular time in the market where buyers have a lot of negotiation power, and they can ask for things like rate buy downs and buyer agency compensation and negotiating the price. Chris, can we talk about rate buy downs on a very high level and kind of let them know what that means and how that's, let's just say like a 3-2-1.
So what a temporary rate buy down is basically the seller is going to prepay some of your interest for you for the first. There's a 1-year buy down. It's called a 1-0. There's a 2-1 and there's a 3-2-1. 3-2-1s are can be kind of pricey. I won't lie. And not everybody will always be able to get it because you're limited on how much you can get back and all that kind of stuff with concessions. But the 2-1 is probably the most common one. Long story short, what you do is you will have a talk and I'll be like, hey, what do you want your payment to be? And they're like, I wanted it $4,000. And I'm like, okay, the house that they're actually looking at, the payment is $4,650. And I'm like, all right, Jackee, this is what they want. This is their goal. So let's get them a 2-1 buy down. So let's ask for $10K, whatever it is. I'll have to go do the math on it. I have a calculator.
When he says ask for, this is what we're asking the seller to prepay for you so that your monthly mortgage is where you want it to be.
Yeah. So for instance, if the home price is at $4,000 or $400,000 and we go in at $400,000 and we ask for $10,000 back, or we ask for 12 or whatever it is that we can ask back, right? So we'll ask back on those, and then I'll use that money to do the 2-1 buy down program for you. I'll call you and I'll say, hey, guess what? This is what your payment the first year is going to be, $3,850, and you're like, oh, cool. And then I'll be like, but your second year it goes up to 43, and then your last year it goes up to 46. It's not an ARM.
Last year's market rate, FYI.
Yeah, it's not an ARM. People will be like, oh, I don't want an ARM, and I'm like, it's not an ARM. They're literally just
adjustable rate
giving you, they're just prepaying that interest for you to help you get a lower rate for the first couple of years and help you ease into the payment. What I tell people, especially my first time home buyers, and this can work two different ways. My first time home buyers, I'll be like, hey, this helps you ease into the payment. You'll be making more money in a year. You'll be making more money in 2 years,
Right.
and you'll be making more in 3 years. So if we don't refinance it, more than likely you'll be making more money. And then 2, buyers that are seasoned that are moving from, you know, a 2.5 interest rate or a 3.5 interest rate, and they're used to lower interest rates. This helps them be like, okay, like it's not that much of a difference.
Sure.
I use this strategy a lot. I would say probably 50% of my files come along with a buy down, just because right now, and it's what I tell everybody, is if you don't ask, the answer is always no.
Exactly. And I always ask.
You always ask for money because you're not paying for the buy down. We just use that. Now we can use the money towards your buy down. We can use the money towards your closing cost. I mean, we can do whatever you want to do with it. We can do a permanent buy down. I can, you know, if they get enough money, I can buy your rate down. I'll buy your rate down. It's just whatever you want to do. It's whatever goals you have. But I had people be like, no. Like, I just want to offer 400 and I don't want to offer anything else. And I'm like, why? Like, just ask.
Just ask. Can you please tell me what the limit is for VA concessions, seller concessions? Because there's a limit. You can't say, hey, seller, I want.
There's a limit, and I don't want to confuse people. It's 4% plus closing costs, and there's other things you can ask for too, but I don't want to confuse everybody.
Okay.
So,
and the reason I bring this up is because if a buyer asks for way more than 4% and the seller agrees to it, guess what? At the end of the day, if the lender can't use it, then that money's forfeited, correct?
yeah, but I'll try to find a way to use it.
We will always try to find a loophole there, but you know, in plain English, there is a limit to that, and just wanted to let you know that ahead of time. So pre-underwriting, get pre-written for stronger offer confidence. Now,
so all of my files, there's a lot of lenders out there that do like just pre-qualifications.
Not good.
I don't do that. I don't want to ever like say, hey, Jackee, these people are good. And then I'm calling you after we made the offer. And then I'm like, hey, there was an issue and blah, blah, blah. So I pretty much pre-underwrite my files before we even are making an offer. Awesome. There might be something that I need, you know, like something small that I'm like, Jackee, this isn't a big deal. Like, here's your pre-approval letter. I'm not worried about it. You have to look at all of them. But for the most part, I mean, I pre-approve my people. I don't ever send a pre-qualification letter.
I love that. And the difference, you guys, is the pre-qual is just looking at your application, looking at the numbers, plugging them in, and either giving the thumbs up or the thumbs down. They're not really diving deep in your file. They're not pulling your credit. They're not
something you could lie on. You could be like, I make $300,000 a year. And I'll be honest with you, it's really funny too. People don't have a clue how much money they make. People don't know unless you just work at a job and you know that your salary is $70,000 a year. Sure. But a lot of people don't have a clue how much money they make, you know, with bonuses, RSUs,
good point.
You know, all that kind of stuff. With the pre-approval process with me is that once I get you pre-approved, Jackee goes and makes an offer. This is very valuable when it comes to VA loans. And I don't even think we have this in a slide. A VA loan, FHA loan, and USDA loans, those are government loans. And they come with pretty much a protection when it comes to the appraisal. And so let's say the home is $400,000 price, and that's what you agreed to pay. But then the appraisal comes back and it's $375,000. Well, you're protected. You can walk away.
Yes.
You know, Jackee's really, really good. She's a very good agent. And I know she works on a really good team. So they're able to really get a good idea of what a home's going to be worth, right? Sure. So if somebody has one price at 400, she's like, Chris, the comps are 385, then this is what we're going to offer. Right. Fine. But let's just say an anomaly happens and it's $400,000, it's $400,000, and we get the appraisal back, and I'm like, hey, you don't, you know, per the terms of that, you can get out of it, right? Important things when it comes to FHA VA is, let's say that we have a guy that's pre-approved VA. Y'all submit an offer at 400. A conventional person submits an offer. A lot of times they want to go with the conventional.
Why is that?
Well, because of the appraisal. The appraisal, and then there are also like inspection things that might not come back, pop up, you know, that they might look a little bit harder on the VA because it's a government loan. Some
things that the appraisal will flag are things like wood rot on the house, flooring. Flooring needs to be complete.
Chipped paint
if it's a 1978 build or before. And vegetation touching the house. Those are the main things that the appraiser is going to flag on VA, which are, you don't really want to go for a dilapidated fixer-upper house when you're trying to do a VA loan, because those are the things that are going to get kicked back and you're not going to be able to get approved for the loan. So the good news with working with folks like us, I've gone through the VA loan process several times, including my own couple of properties, and I know exactly what those appraisers are looking for, and I can spot immediately if there's going to be a problem. So I don't want to waste your time. I don't want to waste your money. Chris feels the same way.
I definitely don't want to do that.
We don't want to waste your money. Inspections are expensive. They can be, upwards of $400, $500, $600. So
especially if the foundation gets flagged and then they have to
exactly.
do the foundation,
Yeah.
So
Now we can't catch everything. That's why we do the inspections. But for the most part, these are things that pop out right, jump out right away and during the first walkthrough and tour of a home. So that's what we're here for. That's why you hire a real estate agent to help you out and hopefully, surpass all of those icky wasting of money and time. Great advantages of new construction right now is that builders are offering incentives. They offer some special financing that are not necessarily available at market rate with certain lenders. They do offer extended home warranties. So you get your builder warranty with your brand new home that no one's ever lived in before. Sometimes the appraisals can be a little bit more, a little easier with the builder's lender because they're all kind of like working with each other. And then since Texas has such a wide selection and tons of inventory, actually, at the end of the year, they're trying to offload a lot of their inventory. So you can get some of the best deals, in November and December months. If this is something that you would like to consider, then there's a ton of benefit there. The point here is that they want to make sure that the veteran isn't just going for the absolute cheapest possible house. They want to make sure it's safe. They want to make sure it's livable.
It's not a money pit where you're going to be spending money
exactly
on fixing
because
stuff.
Something that looks cheap in the forefront can later on, like he said, be a total money pit. Texas property tax benefits as a veteran, there are tons. I'll name a couple. If you have a 100% service connected rating, then you get no property taxes. So that's a huge win for veterans. You still do get property tax benefits exemptions if you are a disabled vet of any rating. I believe, I don't know what the cutoff is, but
you have to go to the CAD and you have to apply for it yourself.
Right.
I can't do anything for you on it.
Sure. But just so you're aware, any kind of rating you have will knock off some taxes if you go to the county and present your disability rating to them. What are some of the other tax benefits off the top of my head? Texas property taxes are among the highest in the nation. And so that really helps that they offer this to veterans. So IRRRL, it's an interest rate reduction refinancing loan. This is one of the biggest benefits of a VA loan. And I'm going to let Chris talk about it, but really quickly, the funding fee is only 0.5%. And if you're disabled at all, it's 0. We talked about that earlier. There's no appraisal for this refinance. There's no income needed, so you're not getting your income revalidated. A mortgage-only credit pull, and of course, there's really competitive rates. My husband and I just used the IRRRL last year after our 3-2-1 buy down was up. It was fantastic. I think we might have even gotten money back at closing. That happens sometimes.
It's really important that you work with a lender that doesn't charge origination fees and lender fees. I mean, we're not supposed to charge lender fees if they sneak it in there. They're not supposed to. But yeah, so that really makes it really, really cheap for you guys for the refis. And then, you can do these like every 210 days. I mean, it has to be advantageous for you. They're not just going to
Is it 1%, right?
I think it's half. Yeah,
you really want to make sure that it makes sense. You don't want to just go through all of this refinancing process to save yourself a 0.5%. You really want it to be worth it. And so that's why, sometimes some lenders will only call you if you're saving 1% there.
It's probably the star, I would think, of the VA loan. It's just being able to help that vet continue to get a lower payment.
How does the IRRRL compare to a typical, conventional refinance? Because I know that there's some major costs involved in a refinance for a conventional loan. Just to compare a little bit, and so
you have the fees that are cheaper, the rates are cheaper.
Okay, so just overall,
it's just overall a cheaper product, and it's so much easier to do.
Mainly because you don't need an appraisal.
Yeah, I don't need an appraisal. I don't need to repull your credit and see that your credit when you bought the house was at 800 and now it's a 620.
Yeah,
awesome. I don't need to do all that stuff, and it's just so easy.
Assumable VA loan. So any government-backed loan is assumable technically. A VA loan, FHA, USDA, correct? So what that means is if the seller has an assumable loan and they have a really awesome rate, like 3%. What you can do is you can come in as the buyer, assume their loan, as long as you qualify, of course, and you take over their loan balance and you get that rate. So the tricky part is, and this is actually in this particular market getting better and better. The tricky part is you have to come up with the gap, which means if the house is now worth $400,000. They bought it for $300,000. If their loan balance is $290, you have to come up with the difference between $290 and $400. So that's where it was tricky and not really accessible to a lot of folks. But today, unfortunately, a lot of folks are either upside down in their payment. They bought a couple years ago in the height of the market. And so their loan balance is actually really, really close to market rate. And so that gap that you have to pay is very, very narrow. I mean, I have a client that I think they took over the balance and paid maybe $5,000. And now they're sitting in an awesome 2.75 rate. Again, as long as you qualify, and you don't have closing costs with that, right?
I don't think you have closing costs. It's the servicer that does.
Oh, right.
So here's the main thing with an assumable loan. If you are on the hunt for something like this, you obviously got to find the person that's willing to do it.
Sure.
Because they take about 3 months. I don't know how long yours was.
Sometimes it depends on the loan servicer. They're not all the same. Some are better than others. I have a list that are the headache ones, and I have a list of ones that are better.
You typically I tell people, most of the time when I'm talking about assumable loans, I'm talking to my agents that have listings, and I'm like, hey, just throw it out there.